360 Mortgage Solutions. So I wanted to jump on this morning and share with you a little bit about credit cards, but more specifically, how a lender will view your credit card. And the reason I wanted to talk about that is I talk to a lot of clients who will say things like, I've got a $10,000 credit card, but I owe nothing, I don't use it. Or I've got a $1,000 credit card, but I always repay it at the end of each month, so it doesn't owe anything. So what a lender will do when they see a credit card on a balance sheet is they will take the limit, assume that you owe that amount, and then they'll work out a rough repayment. And usually it's about 3.5% of that. And that's your monthly repayment. So for example, that $10,000 credit card limit that you never use just sits there, it's just in case of emergencies. The bank will look at that as though you have to pay $350 minimum each month, and they will take that out of your income before they look at how much you can afford to borrow. And look, when you think about it, it makes sense because you've got that $10,000 limit. Nothing's to stop you from racking up some debt, going on a trip overseas, or buying a whole heap of furniture on the credit card, and then all of a sudden you do have that minimum repayment of $350 a month. So all the lender is doing is making sure that you can still afford those repayments. So here's something that you can do. If you are thinking, I've got a credit card with a high balance and I don't ever use it, why not lower the balance? Particularly if you're going for a loan of some kind, lower the balance to something that may not be quite such a stretch. So if you still need it for backups, maybe $2,000 might be a nice limit. Or if you're trying to get rid of it altogether, lower it to as low as it can go, $500, and just have that as a real in case of emergency. Anyway, guys, I hope this has helped to explain a little bit about how lenders view credit cards. But if you want any more information, then just comment below.